Hello, everybody, and welcome to Understanding the Bungee Part 2 with Neil Bradford.
Hello, everyone. Hi, Jody. Here we go with Part 2. Hopefully, everybody can remember everything that we said last week in Part 1. And for Part 2, we're going to be looking at high probability moves and predictions initially. And after that, we will then look at how the bungee helps us trade. How we can use everything we've learned to help us enter trades at the best place possible or the safest place possible, and how to stay in trades for as long as we can. So we've got a number of topics in this area. We're going to look at divergence, inverse divergence, snapbacks, noble and royal semaphores, a whole load of stuff. So we'll make a start straight away on that. And we're going to look at divergence. Bungee divergence can give us a guide as to how big the subsequent move will be. I don't know if you've ever noticed that. But divergence on the red bungee only suggests that the subsequent move may be a relatively small reversal. But if we can get divergence involving the yellow bungee at the other end of the scale, this could be the start of a bigger move. And I think both those are illustrated on this chart. Then get my line up. So here is bungee divergence involving the red bungee and a relatively small move down. Yeah. And here is bungee divergence involving the yellow bungee. And that is a bigger move. So just to illustrate that point. Okay. So if you've never noticed that before, that might be something you just want to be aware of when you're checking out divergences. We don't just have to look for divergence on the awesome oscillator. Yeah, it doesn't matter what the time frame is. It really doesn't. These rules apply to any time frame. Okay, and I've quite deliberately on some slides avoided the time frame. Yeah, because you will see the same setups. It really doesn't matter. I can't remember what time frame this is when I did the screenshot, or which currency pair, because it doesn't really matter. Are these slides available to us? I'll talk to Jody about that after the event. They may be there, but you'll certainly get the recording, that's for sure. Okay. So the other type of divergence we need to look at is negative or hidden divergence. Some people call it negative divergence, some people call it hidden divergence. Yeah. And we've got examples of this on this slide, again, which we can illustrate. So what I'd like you to look at is this spike down here compared with previous. Is it that one? No, my apologies. It's this one here. Let me just clear that. it's this one over here compared to this. The negative divergence, or the negative divergence, yes, is not dramatic, but we have a higher low and a lower low on that purple bungee. And that's a sign of moving in the opposite direction. It's also at this side of the chart, this is an easier one to see, where across here we have a low, lower low, and all the bungees, yeah, are showing, bear with me, no, I've picked the wrong one, it's that bit there. Let me just, I lost my notes on this chart, let me just clear this. Was it that one? No, sorry, my apologies, it's this one here, okay? A higher low, got it partly right, and a lower low on the black bungee. It spiked right down, and once again we're going higher. There are probably better examples you can find, yeah. But when you see negative or hidden divergence, take note. The same as you should do with the awesome oscillator, because if it's there, then you need to respond to it and appreciate what's likely to happen next. Okay, so it works both ways, negative divergence and ordinary divergence. Okay, another high probability prediction is a failed snapback. And you might say, so what? Because a failed snapback can be described in so many other ways. There is a failed snapback down here. Yeah, we had a bungee stretch away for this red semaphore. The bungee snapped back to the bottom, but price failed to make a new low. We covered what failed snapbacks are last week. And when that happens, when the red and blue bungees, and in this case the green as well, turn back up, and certainly when they break out of the reversal zone, that confirms that is a failed snapback, and you're on your way to taking out the previous high. Okay? And we did. Now, when I say, you might say, so what? All it is the bungee telling you that this is a 1, 2, 3 reversal. And on a 1, 2, 3 reversal, you would normally enter when price crosses above 0.2. With the bungee snapback, you can get in early. Yeah. And in this case, you can also see that in wavy tunnel terms, all this is a price to wave, a retrace, and a fill the gap. And the bungee is just confirming that. And if you like chart patterns, all this is showing you is the right-hand side of a inverted head and shoulders. When you get when it's setting up, and you get the failed snapback on the right-hand side, and it looks like a head and shoulders, whichever way up, normal or inverted, then it probably is. Yeah. So the prediction, the high probability move after the failed snapback is that you take out the previous pivot, which is there. So if you see a price to wave and a retrace setting up, and you're looking for a fill the gap, then this setup with a failed snapback is giving you added confidence in that trade. Yeah, and you can look down the bottom here for a reason to get in on a lower time frame. Whatever chart this is, if this is an M15, you might see something down here on the M1 or the M5. If this is a 4-hour chart, you might see something on the hourly or the M15 to let you get in early instead of waiting for the confirmation of the trade, which is there on this time frame. That's the confirmation that everything's going good. So by using the bungee, it prompts you to look to the lower time frames for an early entry to just fill the gap. Okay. Oh, sorry, I've missed some of these comments. Am I suggesting that there is a high chance that price will just go to the wave if there's red divergence, and it will go to the tunnel if there's yellow divergence? No, I'm not. I'm suggesting that with red divergence,
That was from your previous example.
Yeah, it is. It's from the divergence slide. That one. Yeah. It's coincidental that the wave and the tunnel are here. It's just the difference between a small move and a big move. Okay. And it depends where it occurs as to whether it relates to going back to the wave or going back to the tunnel. I have not got evidence that it means it's doing either of those things. It's just saying that it's a smaller or a bigger move that's expected. Do you get in when it goes to low reversal zone below? What it is, it stays down and price keeps going lower. Right. Well, you have to appreciate what a snapback is, yeah? This is a move down, and it's only a failed snapback when it turns, yeah? When these bungees turn back up and price fails to make the low.
Neil, the question is about the snapbacks with black and purple on the breakout 3 trades. So he's talking about a different setup.
Right. Okay. Well, we might come to that. Will, if you see an example on a slide later, I think you might. I'm pretty sure you will. And I haven't covered it. Please post another question. Post a question again, and we'll do it when we've got an example. Okay. First slide. Okay. Well, let's quickly go back and see this one. Right, the black and purple snapbacks.
Neil, I think your rule is you keep, those are the breakout 3 snapbacks with the black and purple that I always talk about. I think you look at the red as well, but you've always taught, and this is true, that you keep taking the snapbacks until it goes wrong.
Yes, well, I'll come to that when we get into the section about how the bungee helps us trade. But you can see it on this chart as well. You can see that if you went long here, yeah, we've got a stretch away down for this move to the wave. So you would stay in the trade, and in fact, you've got an add-on opportunity there. You might go for an add-on opportunity there. You might go for an add-on opportunity over here. It's beginning to level out, I admit here, and eventually it turns. And if we had the full charts, we'd be able to see awesome oscillator divergence, I suspect. Yeah. But no, my rule for entering a breakout 3 is when price returns to the wave and then comes back out of the wave, above the wave in the filter. That's my entry. And all I need to achieve that is for the bungees that have stretched away to turn back up, to snap back up. Yeah, okay, the bungees that have stretched away to turn back up. The bungees that have stretched away to turn back up. And it's not necessarily to do with the black and purple. On some instances, like this one here, yeah, you're only involving the black and the purple. Yeah, but they have to turn back up, and they usually turn back up between 1 and 3 candles before the breakout. Those are the best ones. Yeah, when price moves back above the wave and the filter, 1 or 2 candles after the snapback. They're the really good ones. No, they just have to turn over on candle close, Mike. They just have to turn over on candle close. I think that's all I want to say right now, because we are going to look at this later on when we start looking at how the bungees help us trade. We did the fail snapback then, yeah. And then, just to appreciate how things work, you need to know how these bungee strands cross the channel. And usually, with a steep move, and we'll look at the green bungee on the left here, with a steep move across the halfway mark, yeah, that coincides with a red semaphore or maybe even a yellow semaphore, we expect that to continue to the top of the channel. Yeah, the high probability is that it's going to move to the top eventually, and in this case it does here. Yeah, and we also get at this point here, the yellow bungee has moved well up, way above halfway, and we expect that to continue to the top. We expect price action to continue higher until that yellow bungee gets to the top. Okay, now it doesn't always happen. In a very strong move, we can get the bungees going slightly above the halfway mark and coming back down. So you have to be aware of what state the market is in. Yeah. And the other thing that helps you with all that, and we'll come back to it later on, is the fact that if price crosses the wave and the tunnel, like it did here, we expect a yellow semaphore. And I'm not sure whether one appeared here before, but certainly we got one over here. Now, this is if price crosses the wave and the tunnel. You need to be very clear about this, and I'm being very specific. If price crosses the wave and the tunnel, you expect a yellow semaphore. And what we already know is that if you get a yellow semaphore, its partner is the green crossing the channel. Yeah. So if you get the yellow semaphore without the green bungee crossing the channel, it's going to go further until the green bungee does. And if the green bungee crosses the channel without the yellow semaphore, it's going to go further until you get the yellow semaphore. Now, I'm going to say some slightly different words. Yeah. Yellow semaphores always appear on opposite sides of the wave. And we will come to this again a bit later. So bear that in mind. It's not the wave and the tunnel for yellow semaphores. And then there's another example to the right here. Yeah, look at this spike on this piece of chart, which ended up right up here. And the reason I've put this into the right is to illustrate that we've got our yellow semaphore. The green bungee only came to there. And we got a big spike down on that candle. It closed here. Yeah. We know we have to have price going higher than that because we need the green bungee to the top of the channel. So it's no surprise that we went up again. Now we didn't make a higher high, but we had to get that green bungee back up here. It is a very high probability expectation. And the other thing on this end piece of chart is that we get the yellow bungee crossing the channel with the royal semaphores to the shore, usually the noble. But because this royals appeared up here, we also expect the gold bungee to reach the top, and it did. Yeah. So what you can say is that at this point here, we were not going to go down from there. We were not going to go down until we got those bungees at the top of the channel. Now, when I say high probability, what I mean is it's worth relying on it, and sometimes it will let you down. And then so it's up to you whether you trade the high probability rule or the very low probability exception. And that's a psychological thing. You sit there and you look at the chart and you, oh yeah, but what if it goes down? Well, who cares what if? So that becomes a losing trade. Doesn't matter, you're going to get them. More often than not, by a long shot, you're going to get a winning trade by using that to support your trading decision. Okay, let's move on. Now, here's another example of the same thing. Yeah. Over here on the left, we've got the green bungee reaching the top of the channel right there, but no yellow semaphore. So this moved higher until we got the yellow semaphore. And here's an example where you just have to be a little bit open-minded because this green bungee failed to get into the lower reversal zone on this occasion. We had a long move, a strong uptrend. Yeah, we had a short correction. And then this big candle, obviously, this engulfing candle turned it all around. So that probably is all we're going to get. Not only that, but at this point, the yellow bungee's decided it's going to the top. And it's got there. So we're looking for this to continue now because we're looking for an upper noble semaphore. We're looking for this to keep going. It's not on this piece of chart, but that's what the expectation would be. Yes, Renzo, for whatever reason the spike appears, usually news, I agree. You're able to get back into the move up. Yes, agreed. Absolutely. because you know what the bungee is telling you, it gives you confidence in that continued move up. Yeah, on the previous slide. Yes, absolutely right. Okay. The other thing, or another thing that you need to know about the bungee is if the black bungee gets into the reversal zone, it's going to come back out again almost straight away. It's a sharp reversal. Yeah. It may only be a tiny correction. Yeah. But it has to do it. It very, very rarely stays in the lower reversal zone at an extreme for more than 1 or 2 candles. There is a small example. I think the most I've ever seen is 5 candles. There's a little example down the bottom there where it stayed in for 2 candles at the bottom and then it shot away. But for this, look at this move down here. We've got the bungee back at the bottom. Yeah, it had to go up to there to give that tension in that black bungee for it to come back down again to here. Have I got that right? No, that's this little one here, sorry. Let me clear that and do it again. I'm one step behind myself. This little move up and down of the black bungee is because we hit a low and we needed the black bungee to move away so that it could come lower. On this occasion, we have a stretch away, more substantial stretch away, right to the opposite side of the channel. It won't stay there, and it doesn't. And we'll see this when we look later on at how the bungee helps us trade. But if just go back through your charts and look at the behavior of the black bungee. So I ask you the question. Yeah, I ask you the question. Is it sensible to go long with the black bungee there? Or there? Or there? If you're at your charts and you're available, why not wait for the retrace and get in for a better price? Is it sensible to go short? There? Or any of these? You don't need to look at price. You know that when the black bungee gets in the reversal zone, it's going to reverse. Okay. Everybody happy with that one? Good. The purple bungee is uncannily predictive. Bearing in mind indicators are lagging. And I've put some vertical dotted lines on these examples to show you the vertical line is on the low, but the candle before the low, the purple bungee turned up. The candle before the new low. Over here, the bungee turned down there. That's this candle, the bungee turned down. Anticipating this high and this move down. Uncannily predictive. And then for this high, the candle before is where the purple bungee turned over and turned down. And then again, for this low, the candle before, the purple bungee turned up. Price made a new low and we got this red semaphore, But while that last red candle was making a new low, the purple bungee was going up. Yeah? Uncannily predictive. It's amazing for a lagging indicator. So that is something else you can look for. High probability. Okay, you all got that one. These are just things you might learn something else about the bungee just through observation and going back and checking it out. Oh, hang on. I just put an extra bit of text in there. Not only does it show divergence, but it also reacts to wicks and tails. Yes, that's why it does it, usually when there's a wick or a tail. Yeah. Not only does it show divergence, where's an example of that? Well, right here. Purple bungee made a new low, while price made a new high. Yeah. And obviously, wherever it's sloping up and you've got a new extreme, within two candles, that's divergent. And it's divergent there as well. Coincidentally, you might find some of these other strands showing it, but the one to look for is the purple bungee. The black bungee is only an RSI2, and that will react quite quickly as well. Okay, so Noble and Royal Semaphores with a yellow bungee. And we've got this on a bit of a video. Here we go. So we can let this price move along. There, look, coincidence, we've got the yellow bungee at the top. Sorry, the yellow semaphore and the green bungee at the top. Okay. Right. There is a noble semaphore on the opposite side of the wave and the tunnel. And we are not going to turn down here because we still need price to take this yellow bungee into the upper reversal zone. And there it goes. It didn't go very far, but that's it. Okay, it keeps moving to the right. Keeps moving to the right. No surprise. We will look at this again elsewhere, I'm sure. But just look, a stretch away of the red for this three-wave correction. Blue stayed high. Green and yellow stayed in the upper reversal zone. No way is that turned down. It's no surprise that price went to a new high, a new extreme. Okay, stretch away again. And I think we've come to the end of oh no, we haven't. There with you again. What's that? Oh, we started again. No, that was the end of that sequence. Okay. Bring it right over here. Then you can see. So, royal semaphores always appear on opposite sides of the wave and the tunnel. Always. It's well over 99.5% true. It's probably 99% true. Yellow semaphores always appear on opposite sides of the wave. Always. You will never get two yellow semaphores on the same side of the wave. That doesn't mean that every time price crosses the wave, you're going to get a yellow semaphore. But it does mean that if this red one here, well, that's not a good example actually, but let's say this is yellow. It's not going to let me change the colour. Anyway, let's say this one is yellow down here. Oh. Change it back to red now. I don't know what's going on. Let me relaunch my pointer. That's better. Let's say this one's yellow. And this one's yellow. It's not on the opposite side of the wave. So if that was the case, you would expect price to continue higher until it was across the wave. That's the point. That's why you need to know that yellow semaphores always appear on opposite sides of the wave. Because if it appears early, it's going to move to the right until it is on the opposite side of the wave. You know that price is going to keep going. And again, it doesn't matter whether that's a 1 minute chart or a 1 month chart. It really doesn't matter. Okay, let's keep moving. So here's a chart snippet. And you might see this and think, oh, I'm getting ready for a breakout for down, a bounce off the tunnel. But the point is, you know, with that green bungee in the upper reversal zone, you know that price is going higher because we haven't got the yellow semaphore yet. Okay? And the next piece of chart is exactly the same thing. Yeah? Still no yellow semaphore, and yet we've got a red candle up near the tunnel. You might be tempted. Blue and red bungees have turned down. Black and purple have turned down. Yeah? You might think, great, we're on our way. I'm in it. I'm selling. But we haven't got a yellow semaphore yet. You can't. Suicide. And look, we went higher. This is the next bit in the sequence. Price went higher. Now we're at the tunnel. We've got a doji. Great. Now we're on our way down. No, we're not. We still don't have that yellow semaphore. And there's the final one in the sequence. We went a fraction of a pip higher and the yellow semaphore appeared. Yeah. All because we saw on the left-hand chart the green bungee enter the upper reversal zone. So this fill the gap trade, this price to wave fill the gap combination was not over. Now it still might not be over even though the yellows appeared, but that's a different story. That's a different question. The point is we could hang on and wait before we sold, and we could hang on and wait before we exited our buy. Everybody happy with that one? Yeah, good. So let's move on to the more exciting bit. How the bungee helps us trade. Well, I have some personal rules, and this is one of them. If the red bungee is heading in the opposite side of your direction of your trade is guaranteed in the first instance to go negative. So why bother? Why not wait and get in at a better price? Use stretchaways and snapbacks to help you stay in the trade. We'll take a look at that. And we've already covered trade long at the lower reversal zone and short at the upper reversal zone. And that is an observation. You can get carried away with your wavy tunnel analysis, especially your harmonic analysis. Yeah, and we've had discussions in the various trading rooms that I host. Why did this trade go wrong? And invariably, one of the answers is, well, you went long in the upper reversal zone or you went short in the lower reversal zone. And it just doesn't, it just didn't make sense. Yeah, you've got to be aware of that. Use the snapback to confirm breakout threes. We'll have a look at that. And then a little caveat at the bottom. Most of this material is only useful if you're trading real time. If you are setting market orders, pending orders, at a level, because you've done your homework, you've got harmonics, you've got retrace levels, you've got support and resistance levels all firmly mapped out, you know where it's going to turn, or you think you do, so you set a pending order, well then none of this applies, because you won't be there to watch it. You've got a pending order and it just gets fulfilled, whatever. Yeah. But if you are available to observe when you get to that level, you might choose to just wait a bit before you trade. And if it's a larger time frame chart, waiting might save you quite a few pips of your trade going negative before it comes good. Okay. So yeah, never trade. Now, during your trade, the red bungee is going to be up and down like nobody's business. The point is you don't enter the trade. Yeah. Once you're in it, well, price goes up and down, you know that. Yeah. Don't worry about it. It's just trade entry. If the red bungee is coming to the bottom of the channel, it's pointless going long until it's finished its journey and turned around. Right. So, why is that important? It's important because if you can get in at a better price, yeah, you'll have a shorter stop because you're nearer to it. Therefore, the percentage you trade with means you can trade with a bigger trade, you can put more lots on, and therefore the resulting move will give you more profit. Yeah, if that's how you trade. If you trade so that your stop reflects the percentage you're prepared to lose, which is what the advice goes out to new traders, yeah, then the nearer to your stop you can enter the trade, the better. Yeah. So by obeying that rule, you can either get in at a better price, which means you make more, or it might just keep going and keep you out of a losing trade. Instead of it just going against you in the first instance, it might even be a change of direction. Or it might be a big enough turnaround to take your stop out before it continues the way you want it to. When is a breakout tree not a breakout tree? Yeah, that's the question. By observing the bungee and using it as a filter, we can filter out breakout tree trades that aren't really breakout tree trades. And once again, we've got an example here. Let me just see what's happening. So, price has returned to the wave in a down move on the right-hand side of this chart. Yeah. It looks like a nice three-wave retrace to the wave. We've got a bungee stretch away. It's trying to snap back on this current candle. The bungees are turning down. Let's keep going. Right, there's the break below the wave. That's the trigger for the breakout tree, isn't it? But we already have a blue semaphore and we have the black bungees at the bottom of the channel. Will they stay there? Well, it spiked slightly lower, but they absolutely will not. Yeah? And look what happened. Breakout trees evaporated. There you go. So there we've used the black bungee to help us see a breakout tree that looked good initially, but actually was in danger of failing. Now, they don't all fail. Sometimes they come back into the wave and then they take off properly. Fair enough, you can go in on this second attempt. Yeah, if that's what happens. But watch for these black bungees, especially if they are stretched away from the red. Yeah, well stretched away from the red. In this particular instance, that is something worth looking for. It will keep you out of potentially bad trade. Okay. What did we do here? So on the left here, we've got a vertical blue line. Yeah, that is the trigger candle for a breakout tree. We've had a retrace into the wave, and this candle, this red candle, has closed below the wave. Yeah, and the filter, breakout three. But the blue bungee is still up. So it is no surprise that we come down and go back up again. Yeah, and if this was an hourly chart or a 4-hour chart, then that's a lot of pips. Yeah. Now, your original trade over here, you would have had your stop either at the top of the wave or at the top of the pivot. So your original trade would have been good. It would have become good eventually. But if this is a 4-hour chart, you have to wait a long time while this goes. It's over a day of going a lot of pips negative before the trade comes good. Yeah. So watch for that blue bungee. Yeah, that doesn't turn over. It's not a proper snapback. You need the blue bungee to snap back. Okay, and again over here, we've got a flat blue bungee. We've got a candle, we've got a 3-wave return into the wave. We've got a move down, a trigger candle for a breakout 3, but the blue bungee has not turned yet. Yeah, and this next chart shows you what happened next. Okay, so we're over here. And what happened next was the blue bungee continued its journey to the top. So for breakout 3s, if I don't get a good quality snapback of the red and the blue bungees to confirm it, preferably 1 or 2 candles prior to the trigger candle, I don't take it. And every now and again, I miss a good one, but I don't care, because it keeps me out of a lot that fail. Now, I know that one isn't, strictly speaking, a breakout 3, because we don't have wave below the tunnel, and maybe that's why, yeah? But this could have been one of those breakout 1, breakout 3 combination trades, where it's both trades at once. The wave continues below the tunnel, and the breakout 3 has an effect as well. So I do like those, but they still have to conform. Okay. Let's look at this sequence then. I need to change that. There we go. Let's look at this sequence for how the bungee keeps us in a trade. I'm going to try and stop this at the right point. Whoops. Give me a second on this. Let me just pause that. Sorry about this. I just need to see on this other screen some notes I've made, that's all. We'll work it when we get there. Okay. So, here is a move down, and we might have missed it quite easily because it's pretty obvious we got a very quick move that unless you have this support or resistance level up here, on your in your target, then you might have missed that. But we want to go short. It looks like a good strong move. Okay. So we're looking for the next possible opportunity. Now I want you to look at this. We have a breakout 1 and we have a retrace starting. Yeah. Yeah. Look at the divergence on the red bungee. Look at that. So we're retracing. So we're beginning to think, oh, good, I might get another opportunity to enter this trade short. Breakout 1's developing. Very often during a breakout 1, we get a retrace. Let's see how far it goes. Now, we're just going to have to wait for this to go through. I can't speed it up. Here, if this is the stop and we've got a tail on the candle, but then it took off. Yeah. So it was a nice breakout free eventually, but it did a retrace. That's the point. So there you go. That's your move down. That's the reason why you cannot say to people, oh, I've missed the trade, because price action will retrace and give you another opportunity. And the bungee, by understanding what the bungee is doing, it will support that trading decision. And I have one more slide to show you. Yeah, wave 4 and wave 5, of course. Yeah, the point of this session isn't. Sorry. The point of this session isn't to talk about wave counting. It's to talk about the bungee. The wave count is subject to a different. I think that's it. That's my lot. Yeah, we did this section of chart here. Did we look at this one? No, we didn't. Here's another one for you. Okay. Here is a move down. I think this is a 15-minute chart. Okay. Okay. We have made a new low here. Is it just going to do a retrace and come lower? Or is it going to move higher? Well, look at what we're looking at. Purple bungee. Predictive. Yeah. So I think we're moving higher, don't you? Let's see. It did slightly. Let me just stop this at the right place and then I'll talk about that. Okay. So there was that purple bungee. We did spike up for that blue semaphore very close to the filter with the black bungee at the top there. And I forgot to stop it there to say, well, here is a fair chance that this is going to turn back down again. And sure enough, it did. And on this big candle, we got the snapback of the red as well. All the other bungees, look, down here, have stayed really low. Blue, green, yellow, they've hardly moved off the bottom. So this was always going to be a stretch away and a snap back down. In this case, it was the black, purple, and red that were involved. Yeah. Then we've done our retrace back up. Okay. And we've got a stretch away to the top side, which is now turning over down. Is that breakout 4 bounce off the tunnel? From the sequence. Right, so that's confirmed now. The blue has turned up. That's a failed snapback down, isn't it? Failed snapback down. So we've already talked about what you can expect. Yeah. Let it go up. Here it goes. We've moved up. We've moved down. Now we're continuing higher. Let me just watch this going through. I'll stop it in a second. So failed snapback down created yet another stretch away up for this. And it snapped back down again. Yeah. And on this red one here, I want you to see that we've got the blue below the green. So the reason we're going back up is because we're going to get pulled towards the green rather than pull the green down to the yellow. The red and the blue are weaker strands than the green. Yes, Guido, never trade against the blue. On the current time frame, that's an excellent bit of advice, and it all depends on where the blue is. The blue doesn't always cross the channel. Okay? The blue doesn't always cross the channel. But I do know, I have a colleague who trades the blue from the bottom of the channel to the top of the channel and back down, and he just trades the blue. And the blue tells him when the waves, where the waves are. And like in this case, we've got 5 waves and 3 waves, and the blue reflects that on its journey. Sometimes in different ways. Yeah, sometimes it will make the whole move for a 1, and the whole move back for a 2, and then a move for a 3, and then a partial move for the 4, and back down for a 5. So slide 47, here we go. So this is another breakout 3 here. Price stayed in the wave, and we got a breakdown. I'm just going to let this play out because we're running out of time. And here we go. That was your re-entry, the red candle. The bungee snapped back up here. Yeah. Now we've moved above. Now we've moved above the filter. We've got a bungee stretch away. We don't exit when there's a stretch away. So the chances are we will come lower. Yeah, we stay in. In fact, that could be another potential entry just there for that breakout 3. Yeah. And there it's come lower. Watch it again. This is how we're staying in a trade. There's the move above the filter. Yeah. Are we going to exit because price has gone above the filter? Not if there's a bungee stretch away. Because there will be a snapback that lets you get out at a better price. And this is the whole point about these stretchaways and snapbacks during trending moves. Yeah. So once again we've gone lower. You'd be kicking yourself now if you had exited here because price moved back above the filter. But if you wait for the bungee stretch away to snap back, yeah, if it had only gone that far and then turned up, fair enough, then it can exit. But most of these, so there are more of these that continue lower. Right, we've gone above the filter again. Do we want to exit? It's a stretch away that snapped back. It's still stretching away though. Because this snapped back and then turned up again, I'd like to think I was still not coming out because look where the green and yellow are. They're right down at the bottom. This is now a stretch away involving the red and the blue, which is going to snap back. So you're still not exiting that sell trade. Right, now when I prepared this slide, that's as far as it went. Okay. So what I want to do now is just go to that same chart, the Euro Aussie M15, and see what happened since. And it was right there where we came up to the filter. Here. This is a live chart now. This is where we were. Stretch away. Green and red were right down at the bottom here. Yeah. And then we got a snapback down, which spiked down and went back up again. Now, you could be excused for coming out there, but here we have another snapback down you could re-enter. If you got frightened out by this, which you would be forgiven for, you could re-enter here, and we're on our way down, and then we get a stretch away forming again involving the green. Now, the green's crossed the middle of the channel. Look here. So when we get a retrace, when we get a snapback down, we want to be out. This is telling us we want to be out. And this all happened since the sequence I prepared at the weekend. Yeah. So there would be an exit. There would be another entry. It did make a new low, and then another reason to get out of it, just in here. And that brings me to the end, I think. Yeah, it does.
Thank you, Neil.
Why is that not showing? Oh, it's because of the pointers still up. There we go. So what I hope I've done is manage to inspire you to pay some attention to the bungee, and don't try and soak it up all at once, but take certain aspects of what you've learned and build on it over time. And hopefully between last week's session and this week's session, we've achieved what I set out to achieve, and that is that we've demystified the bungee for some people. You don't have to use it, and you don't have to use the Semaphores, yeah? But if you get to grips with it, it doesn't half help with confirmations and with confidence in your other trades, whether they be harmonic or wavy tunnel or both. So we discuss the bungee every day when I'm running a trading room, London room and New York room. Inevitably, it comes into our analysis and helps us decide what's going on, what's going to happen next. And we've got quite a reasonable track record of predicting the next moves by using high probability analysis, including the bungee. And if you can do that, you can trade it and you can make money out of it. So please be inspired. And with that, I'll hand you back to Jodie.
Thank you, Neil. That was terrific, and I know that everybody got a lot out of it. So like Neil said, you want to continue with this, make sure you join his trading rooms, and you will learn how to master the bungee and the Semaphores. Thank you, everybody, and thank you, Neil.
Thank you.